so much you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy? The podcast where we try to figure out whether Trump's policies are hurting the economy, helping, or just a load of hot air. My name's Kobi Tirey, and I'm a Democratic media consultant trying to earn the Democratic Party the credit they deserve for outperforming Republicans on the economy for basically my entire lifetime. And keeping me honest in that pursuit is the anonymous financial practitioner, Banker Bill. Why is Trump attacking the Fed? With unemployment rising, inflation rising, and public opinion plummeting, why is Trump going for broke with increasingly laughable and desperate attacks on the Fed? Banker Bill thinks he knows Trump's endgame. The Liberation Day tariff rates weren't a bluff. They weren't AI slop. Trump's desperate to get them back, and the only thing standing in his way is an independent Fed and market-driven interest rates. And that's before we even get back to yield curve controls. But first, we wanted to take a moment to thank everybody who reached out to let us know how much they enjoyed the last episode of the podcast. We were really proud of it, and we're so happy that so many of you enjoyed it so much as well. We're really proud of the devoted small following we've earned, but we need your help to reach critical mass and to start growing this podcast. So please leave us that 5-star review, and please share this podcast with your friends and family. You can even sign them up for our email list so they'll get a reminder every time a new episode comes out on isitbadfortheeconomy.com. But back to the Fed. Trump's attacking the Fed in demand of lower interest rates. Lower interest rates would allow for higher tariffs, but with unemployment rising, we're probably going to get lower interest rates anyway. We're going to break it down piece by piece and start with the inflation numbers. Banker Bill, you texted me the other day saying we can no longer say that inflation is coming down.
I mean, I said it because I've been getting frustrated with the lazy take of people saying it is coming down. Look, if I look at what was inflation 1 year ago, and is it higher or lower? We haven't made a new low since last September. Since September of last year, we're averaging 2.5% through July. For the last 2 months, it's 2.6%. The same 2 months last year, it was 2.4. You look at other metrics, producer price index, that was in the doldrums for a while. That's now coming up. That's breaking out. You look at CPI, that's also stopped going down. That hasn't made a new low since about the same time last year in September. We're no longer disinflating.
We've talked a lot about how inflation has been so sticky, stuck in those mid 2%. Do you expect it to start going up sharply, or do you think we're going to just slowly keep going up until we start getting to 3% and even higher?
Look, I mean, ultimately, my case is, and I stand by this, unemployment's going up, albeit slowly. Eventually, that will put a lid on inflation because there won't be money to spend. Can we get a stagflationary environment? Sure. It's looking that way, right? Unemployment's going up and inflation isn't going down. It's kind of flattened out on a year-over-year basis. So we're kind of stuck in this almost 3% inflation picture. And there's numerous studies out there, one in particular I read recently, that show people can feel inflation above 2%. Inflation from 1% to 2%, they don't. And, I'm speaking only for myself, I'm still feeling the inflation. My anecdotal experience, what I'm experiencing myself, talking to friends, family, et cetera, it jives with what we're seeing in the data. This is also, by the way, with the cheapest gas prices since 2021. So we're still at these elevated levels of inflation with energy actually being a tailwind relative to the prior years. If energy prices were at 2022 levels, inflation would probably be much higher than what it is now at whatever it is, 2.6.
So then how straight is the line between Trump's tariffs, Trump's chaotic campaign to make everything as confusing as possible, and this inflation? Would we expect to still be range bound or even coming down a little bit if Kamala Harris had won?
I think, look, it's hard to say. I'm not going to be revisionist. I would say you're asking me the direct question to answer it. I would expect in the absence of the tariff policy, I think the Federal Reserve may have cut probably a meeting or so sooner. I don't think it would have been much sooner than that. Their posture, as we've discussed, was already to cut. The tariffs were an external shock to that. We can debate the impact of the tariffs, but it is a new thing that you have to consider. And to say, and they're already in a bind. Unemployment is rising, albeit from a point of strength, and inflation is above target. And by the way, new deficit spending was just passed. So, the Fed's in a box. Inflation had been coming down, but now it stopped. And so I think had inflation kept coming down, I think the Fed would have cut a little bit more. I think what scared the Fed off was introduction of tariffs plus inflation stopped coming down. I think you're hard pressed to say that one doesn't have to do with the other.
I guess what I'm trying to get at, we know that part of the reason these numbers are starting to tick in the wrong direction is economic basics, principles, foundational stuff, and part of it is politics. And it just feels like way too much of it is politics right now.
I would agree with that.
Do you have a kind of sense of it's 50% economics and 50% politics, and we'd want that number to be closer to 90-10, or
it's hard to say. There's a mixed bag. You have some good, some not so good. As long as there's people that are employed and employment stays in there, it's hard to see significant negative deterioration for a number of reasons. You have the people that, if you're working, every 2 weeks you're contributing to hopefully your retirement plan. That's a positive drift for stocks. And otherwise you're spending in the economy. So, I mean, that helps put a lid on the negative impacts too. You're waiting for a catalyst to see what breaks. It could be tariffs. It very well could be. But my expectation is they, as in the administration, they're going to try to run this thing real hot. They are not going to be concerned if the dollar devalues, and they are going to start targeting. I think we're headed toward yield curve control to target a specific policy rate. They will shift government borrowing into the shorter end of the curve, and they're going to gamble that people will still buy that debt.
I don't even want to get to things breaking yet. Obviously, it's in the back of all of our minds right now, but you've done a really great job of not even just convincing me, but explaining to me that when folks are doing as well as they still are at this point, it's just going to take a long time to fall off of that cliff if that cliff really does manifest.
Right. We talked about, it's crazy that people are spending $1,000 a month on a car payment. That's crazy. It's a wild number, but they are.
But if it's a mixed bag, so much of the negative things in the mixed bag are political decisions, and so many of the positive things are economic drivers.
They are, because tariffs are a political tool that create, economic distortions.
So it just seems to me that Trump has to bear the responsibility.
Oh, certainly. They own all of it from the start. Remember, they were trying to put off what they owned. And then you had Lutnick come out there and tried to bottom tick the market at the end of March and saying, we own it. We own everything from now on. Interest rates are marginally lower than they were. Mortgage rates are marginally lower than they were. Earnings are up year over year. What changed? Tariff uncertainty. But now we're starting to get more certainty. You're starting to get data. It looks like an effective tariff rate of like 11% worldwide. That's a tax. Now we're starting to get dribs and drabs of research coming out. Goldman Sachs telling us it's like 20% is being paid by the consumer, 14% by the exporter, and then the remaining 64% or so is by the U.S. corporate. So for every $100 of tariffs, you and your boss are paying $86. That's a new tax. Any pro-business person is going to tell you, if you raise my corporate taxes, what am I going to do? I won't have as much money to invest in either new equipment, or I won't be able to hire more people. It's always the criticism, and it's a good one. It's true.
Something that really struck me in Powell's recent talk at Jackson Hole was that he said something that, if you, in a non-economist, non-academic context, was absolutely infuriating. He said that he expects inflation to create a one-time price hike, but because the economy is so complex, it is going to be a very, very long time before that single one-time price increase happens. And we're not going to be sure how bad it is and how long it's going on, because it's going to take so long for it to work its way through the system.
Powell can say that because of the audience he has at Jackson Hole, a conference of economists. Fine. I've said this before. Don't you dare tell people that increase in the price level is not inflation. Powell's talking about something entrenched that is stuck year after year. So if inflation's 2% and there's a new thing that impacts inflation, and suddenly inflation every year is 1% higher. When they're talking about inflation, that's what they're talking about. Sustained price increases over time. The price level will be one time. So inflation's 2%. Next year it's 5%. Then it goes back to 2%. That's what they're saying. I initially agreed. It is the price level, and I still do. But the way that the tariffs have been rolled out is that it is not a one-time increase. They are doing this over time in different industries and for different countries, for different materials. And tariffs being, anti-trade. Another reason in which they are shunned by economists as a means of any type usage in tax policy, except for nascent industries, is because you don't get to choose how the tariff story plays out. You get to pick the industries and all that, but you don't get to pick how it goes through the economy, right? I just told you, exporters are paying a piece of it, the U.S. corporations, and then the end consumer. When you enact the tariff, you don't get to pick how that mix plays out. Not only is it an inefficient way of taxation, it's one in which you don't have long-term control.
Let's come full circle. Do you expect this inflation to keep ticking up slowly, at least for the foreseeable future, as the tariff game keeps getting played? Or is there still some hope left that we're range bound and that we're simply at a slightly elevated rate that's just stuck higher than the Fed's goal of 2%?
I think inflation will continue to grind basically right where it is, near 3%, where we can all feel it until we have some kind of breakout in unemployment. And given the recent changes in immigration policy, I'm not sure we'll get one.
Well, then let's attack the other side of our triangle here, the connection between inflation and the unemployment rate.
Yeah.
We talked a little bit about the employment rate 2 episodes ago when we did a deep dive into the Bureau of Labor Statistics. The numbers were bad again. In June, we actually lost jobs, or the unemployment rate went down for the first time in a long time. Were these unemployment numbers in line with your expectations?
I look at the trends in unemployment, and then as far as extrapolation goes, you look for an inflection point. I focus on the U6 especially, and I look at, in particular, the spread or gap between the U6 and the headline U3 unemployment rate. And I look at that as a way to evaluate labor quality. Not are you unemployed, yes or no, but are you getting the hours you want? Are you in the job that you want? And there's quantitative measures behind that. Are you over or underemployed? How much money are you making, et cetera? This is a slow grind higher. So there's a 4% gap between the U6 and the U3. As that gap widens, say at a 4, 5, 6%, that has an impact on prices or inflation. Because if people start getting laid off, or their jobs aren't paying as much, or they don't have the hours that they need, there's less competition for goods and services. Simple as that. If there's less competition and therefore less demand for goods and services, it's not going to drive prices up. I think with the tariffs, we are now embedding some kind of price floor for inflation. At some point, if unemployment keeps going up, it's going to have a negative impact on inflation, meaning inflation will fall. But I think because of the tariffs, it would not fall as much as I would otherwise anticipate.
Okay, that was a little complicated, but I think I understood it. There is a natural connection between unemployment and the interest rate. Makes sense. When folks have more money to spend, people are increasing prices. When folks are spending less money than they were before, folks have to lower their prices in order to move product. Yeah. That makes sense to me. You're saying, though, because the tariffs, because of that, unemployment cannot bring inflation down as much as it should. So
yeah, I think that may turn out to be true. Why? Because now as a producer, I can't cut my prices. Right? I have to source more, maybe domestically, and that drives my price up relative, or I'm still paying these tariffs. I can't cut my price as much. And not only is it's not a fixed cost, it's a variable cost. There's no analog to this, with the tariffs, going from a 2% tariff rate to an 11% tariff rate. So you don't know what's going to happen. It's a huge ring of uncertainty. And you ask me all the time, well, then how is the stock market so high? It's like, well, you know the answer, Kobi. We got to dance as long as the music's on.
I do want to ask, though, that seems to me like a pretty radical shift in economic.
Yeah, I don't think it's consensus because other folks think it won't matter. Unemployment will go up. People won't buy anything. If you're not buying anything, you're paying tariffs on nothing. I don't necessarily agree with that. You can't, in previous cycles, you can't necessarily get the product where you were getting it from in order to cut your price. You're now stuck paying a higher price. Where are you cutting to?
Just to clarify, this is a banker bill informed theory. You're saying this is not reporting economic consensus to us, but
no.
So we'll keep an eye on it. But if that's the case, how fundamentally out of whack is the relationship between unemployment and inflation? We
don't really know because of the impact of the tariffs. We haven't seen a breakout in unemployment. I mean, the U6 is now over 8%, 8.1%. That's the highest it's been since October 2021. It's gone up slowly, though. It hasn't spiked, right? You haven't seen a jobs market panic. It's gotten harder to find jobs, right? Now we're getting information of where we're losing the jobs. We're losing the jobs in manufacturing, government, and consumer retail. Hey, you've probably read Young people graduating college can't find a job, can't find any job. Software engineer doing DoorDash. Well, where in former tough environments for young people would they hide for jobs? Consumer and retail jobs. That industry is shedding jobs right now. So these people who just graduated, these young people under 25s, they want to work. They can't get any work. Under 25 unemployment, what, near 11%?
Look, I don't want to do a victory lap on manufacturing jobs being down. We always want there to be more great manufacturing jobs in this country, especially union ones. But do you see those lost manufacturing jobs as being another result of Trump's crazy chaos? Can we kind of blame him a little bit for the fact?
Oh, I mean, no shit. I mean, that's all just posturing. These manufacturing jobs they're to the extent that they wanted them to come back. You're not going to get them back by charging more on the factors of production to make their goods. Okay, if I'm in North Carolina and I'm the manufacturer of anti-lock braking system modules for cars, and I import my chips from Taiwan for it, my brake lines from Germany, and whatever else plastics may come from China, what happened to my prices? What happened? How am I benefited?
All right, so we'll blame
They
those
never
all.
targeted the whole thing. The whole thing. Look, I'll calm down. Okay, I'll calm down. Not to play revisionist. The whole thing is not targeted. Okay, had they come to the table and said China's the bad actor, they don't play fair. They don't play fair with us or anybody else. They're rapacious. They take more than they give, and we need to catch religion on it. And they said, and this is the administration I'm saying, said it's China, 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 and got, for example, all of NATO together and said, we're going to cut all tariff barriers, non-tariff and tariff barriers to zero for all NATO countries. And in exchange, we're all going to raise tariff on China and only China. Maybe this could have worked. But enacting tariffs at the geography, industry, and raw good level is not going to help in any way your domestic manufacturers. You need the raw materials to come from somewhere. So that's the long and short of it.
Well, again, I was trying not to get too political because, again, I do not want to celebrate people losing their jobs in the slightest. But not only is Trump's tariff policy dampening the entire economy and sending inflation back on a slight increase, it seems to be backfiring pretty spectacularly.
I mean, look, this is happening in the manufacturing sector again with diesel fuel prices that are near 4 or 5 year lows. Diesel's a huge input for manufacturing and wholesale jobs. And we're losing those jobs right now for the prior 3 months. Negative, negative, negative. Not a good trend.
So not only are we throttling economic performance.
That's what a tariff does. It's a tax.
We're, in fact, wasting this incredible moment of low energy prices that could be a major driver of economic opportunity.
Yes, I think so. I mean, prices on other things are much higher. Electric's gone basically parabolic. I could show you a chart on that. But, natural gas and crude oil, gasoline, that's all at, 4-year lows, Kobi.
So this is just another classic example of Trump taking a win away from himself.
Yes. Yes. Getting in his own way. How many times have I said to you, if they would just be quiet? I don't know why they didn't run and hide the whole summer. They put the tariffs in place, let Memorial Day hit, run and hide. No, they just can't do it. They can't.
Well, and that's what I was saying in my intro. With so many warning lights flashing, but at the same time, the economic trends pointing in the direction of driving the incentives that they want to establish.
Yes.
Why
We're already there.
Why don't they just shut up and let, it's chaos's fault, it's normal economic trends' fault, don't blame this economy on us, but they seem to be wanting to take ownership of it as they're destroying it at the same time.
Yes, even as far as attacking Powell and making Powell the boogeyman, which I said would happen to you, is so that they did the Jack Sparrow step from Joe Biden to Jay Powell. They could have just left it at that. Let him be your boogeyman. If your tariff strategy doesn't work out and the Fed decided to have the read through on tariffs instead of cutting and ultimately causes a recession, from the jump, you put it on him. Let him eat it. He's a big boy. No, instead they've just gone further and further down the rabbit hole. The firing of the BLS commissioner on what, July 31st? I mean, what are we doing? Earnings of corporations are going his way. Companies are making money. There are investments happening in the United States. Still has a good employment picture. But, can't take the wins where they got them.
we're basically already there, but I want to explore that last side to the triangle that we're talking about here today, the connection between interest rates and tariffs. I think this is the one that's not as classic textbook. This is a connection that you've been drawing a lot lately. But why do you think that Trump wants or needs low interest rates in order to justify or to even increase his tariff rates?
They need an offset for the drag that the tariffs create. Tariffs are a consumption tax. The consumption tax is a drag on economic activity. If they can institute trade wars, right, and institute tariffs, they can narrow the trade deficit and benefit GDP, making up for the consumption losses. The problem is they need a pliant Federal Reserve to cut with them, and instead of making decisions based off of purely the data, make decisions based off of the administration's policy objectives, which in this case would be moving the US government debt to lower rates by borrowing at a shorter end of the curve. So instead of us borrowing at the 10-year, they're going to try to borrow more short, 2-year and less. Why? Because the Federal Reserve, we've established, has more control at that level. So all the tariff policy in terms of its success of bringing in more government revenue while not impacting the U.S. consumer is in part predicated on a pliant Fed willing to cut interest rates in advance of that objective.
Is it just as simple as Trump needs to juice the economy because he's putting a dampener on the economy?
Right. You're going to cut rates to stimulate and offset the drag you create with tariffs.
When you were going into the 2-year rate stuff, it reminded me of another point here, which is that a lot of us initially had assumed that the reason why Trump wanted to control the interest rate so much was because he wanted to get 30-year mortgages low. Sure, for economic reasons, but really because that's such an important political touch point for voters. You have always cast doubt on that theory because it just doesn't make sense with the economic fundamentals. The Fed sets the overnight rate that trickles down into the 2-year and the 5-year and the 7-year, whatever rates. But by the time it makes it to the 30-year rate, it's almost completely washed out.
Market driven. That's right.
So the reason why Trump really needs to get the interest rates low isn't because he's trying to make mortgages more affordable. It's because he's trying to justify the tariffs.
And basically, in a way, monetize the U.S. debt. And they don't care. They don't care if the currency washes out with it. I mean, why would they? 80% of the U.S. consumer goods basket is domestic. So if the remaining 20% costs 5, 6, 7, 8% more, so be it. If it means we can basically inflate ourselves out of the deficit spending.
I'm really struggling to follow this one, so let me know if I've got this right. When we're talking about yield curve controls, what we're really talking about, it sounds like to me, is the Fed buying Treasury notes. And the Fed buying Treasury notes not on the open market, but at politically determined rates. Do I have that right?
Yeah, so they would set, and by they, this would be the Federal Reserve working with the White House, ostensibly, to set a target rate. And if at any time in the market, they're going to breach that, the rates start rising above that target rate, the Federal Reserve would come in and buy to push the rate back down. And there's precedent for this. I mean, the Federal Reserve did this in 2008 when they bought all the mortgage-backed securities. You can go back to formal yield curve control in the United States during World War II. Ultimately, there were negative impacts of that. But yeah, I expect that they are trying to steepen the curve. So they're going to try to push short-term rates as low as they can. And pushing that lever is going to push elsewhere on interest rates and you expect on your currency. So I would expect long-term rates then to rise. U.S. currency relative to other currencies weakens. And with it, the government will try to then borrow at the lower rates. And the gambit is that investors will buy at those rates. And if they don't, how much can the Federal Reserve take?
We're essentially going to start buying our own debt. We're going to start paying ourselves interest. It makes sense that that's not necessarily a good thing, but the idea is that if the Treasury comes out and says, here are all my Treasury notes for sale, how much would you like to pay for them? And the Federal Reserve says, I'll pay X amount. Everybody else, you should feel good about buying X amount. I'm buying it at that rate. And hopefully that way you can get the price down a little bit by basically colluding with one of your biggest buyers.
And eventually the central bank buys basically all the debt, which is what's happened in Japan.
And the first primary way in which that hurts all of us average American consumers and workers is that it dramatically lowers the price of the dollar, which lowers our purchasing power. Is that right?
That's what you'd expect.
Okay. So just to sum it all up, Trump needs a pliant Fed in order to lower interest rates. He needs to lower interest rates to both make up for the economic dampening created by the tariffs and in order to manage the debt as he increases the deficit. Normally, the unemployment number increasing would, weirdly enough, actually help Trump because it would bring down inflation as less folks are spending less money. However, because the inflation is tariff driven, unemployment is not lowering the interest rate as much as Trump would want it to.
Because it's not lowering inflation. Inflation's not going down anymore. That's the problem. The Fed is scared shit of inflation, aren't you? So they're seeing, hey, unemployment's not bad. Basically historically low. It's been going up month and month and month, but only going up a little bit. We got to get this inflation under control. Hold the rates, hold the rates, hold the rates, hold the rates. Okay, inflation is trending down. Let's start cutting a quarter point. This is now going into last year, right? So they're cutting a little bit, they're cutting. Now Trump wins the election, institutes new tariff policy. It is all over the place. Can we agree on that, please? I mean, come on. It is all over the place. You want the Fed to do what? Would you cut? Would you hike? Would you stay put? I'd stay put. That's what they've done since November. Now unemployment is, including the U6, is pushing through 8%. Inflation isn't going down anymore, but hey, it's not going up. Let's try to cut again. Let's see. That's basically where we're at now. And to say all this shit is political, Democratic appointees on there were raising rates from February of 2022 all the way through August 2023. Was that good for Joe Biden's administration? No. Like to say it's political. Was it political then? Did that help Joe Biden? No. They were raising rates straight into the midterms to the highest they'd been in 20 years. Every meeting they were hiking.
I was listening to some interviews with former members of the Board of Governors, and one thing that they really wanted to get across is that you dressed up as business formal gets. You go to this meeting, you don't make any small talk, you don't refer to anybody by their first names, even if you hang out on the weekends. You talk economics, you do not interrupt anybody. And if anybody says anything even slightly political, you can see the displeasure on everybody's face. It seems to me that the culture that the Fed has managed to maintain, even as we've seen other institutions, especially the Supreme Court, get more and more and more political. This is an institution that takes great pride on maintaining its stern technocratic mandate as hard as possible. And it's crazy to me that we've spent all of this time now untangling this very complicated economic web in which everyday Americans are at the mercy of international economic forces, really complex regulatory actions. But at the very tip of the top, at the very beginning of this story, is Trump trying to justify an economic ideology from the 18th and 19th centuries just because he wants to.
Yeah, it's like a nationalist autarky.
No, but forget about the policy itself. We don't need to be doing any of this.
No.
It just boggles my mind how much of this economic uncertainty is just a choice that one man has made for shits and giggles.
We look like clowns. There's other ways to go about it. This is one of the worst ways they did it, but it's the world we live in. Nobody thought everything was going to become Kiss the Ring. That was the miscalculation the CEO class made. They thought it was going to be game on, all this IPO activity, we'd be able to do whatever the hell you want. And instead, it's you can do whatever you want if I say so.
But that's not a calculation, that's a choice. They are making the choice to wake up every morning and kiss the ring. They didn't get something wrong and now have to adjust their activity. They chose.
Well, they are. They have to move supply, production, everything else, go to,
But they're still kissing the ring.
Yes, absolutely.
It does not feel like we're a capitalist country anymore making decisions to maximize our profit.
It doesn't. It feels like something else.
All right. Well, we hope you're feeling a little bit more optimistic. We hope your economic situation isn't a complete grind, but unfortunately, that's what it's turning into for so many of us. We'll keep looking for both silver linings and for worst case scenarios. Thank you so much for listening to Is It Bad for the Economy? please give us that review. Please keep sending us the wonderful feedback, and please share this podcast with your friends and family so that we can stop having to pull apart complex policy and economic webs that are just because one person wanted to bring tariffs back from the 19th century.
Well, if he didn't, then we wouldn't be able to talk about this at all. So no, I mean, like, thank you.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time